Hey, in today's video, we're diving into some big news for retirees and soon-to-be retirees. We'll break down how the current market and economic conditions impact your retirement plans and give some perspective on the new 2.5% cost of living adjustment, COLA, not Coca-Cola, just COLA, coming to Social Security in 2025. Let's face it, high inflation and market swings have kept everyone on their toes lately, especially those looking to stretch their retirement savings for the long haul. And while the market's been on a bit of a comeback and bond yields are giving us a little something more to smile about, we're still up against uncertainties with the upcoming election, potential Fed rate moves, and stock valuations. So what's the game plan? A flexible financial strategy with the right guidance can keep retirement stress low and lifestyle high. In the next few minutes, we'll cover a few essentials to help you stay on track for a long, enjoyable retirement. Buckle up and let's go. All right, let's dive into this chart here. We're tracking annual cost of living adjustments, COLA, for Social Security benefits over the years. Right next to the inflation rate is it's based on the Consumer Price Index for urban wage earners and clerical workers, CPIW. Say that 5 times fast. You'll notice that the recent 2.5% bump for 2025 is a bit of a dip compared to recent years. Inflation has slowed since the 8.7% adjustment we saw back in 22. That is the highest since 1981. But there's a catch. It may not fully keep up with rising costs, especially in essentials like housing and healthcare. So what does that mean for retirees? While COLA helps, it's often not the whole answer. Building and maintaining a strong, diversified investment portfolio can be the key to keeping up with inflation over that long haul. Next up, let's talk about the retirement classic, the 4% rule, a popular rule of thumb introduced by financial planner William Benjamin. It's basically the Goldilocks approach to withdrawals, aiming to find that just right rate for pulling from your retirement fund so you won't outlive your savings over a 30-year retirement. Take a look at this chart. It shows how Benjamin's famous 4% figure is based on historical data. No way. The idea? In the worst scenarios over the years, 4% annually was generally considered safe, but that's with a few assumptions, and it's been far from a steady ride. Safe withdrawal rates have fluctuated quite a bit with market highs and lows, especially when invested in your typical 60-40 stock bond portfolio. Now, even with the ups and downs we've seen recently, safe withdrawal rates are still solid, highlighting the importance of keeping a well-balanced portfolio. The right mix of growth and income can be the key to a steady, sustainable retirement. So remember, with the right strategy, you can enjoy that Goldilocks withdrawal rate, helping your money try to last as long as you do. Last but not least, let's look at the incredible trend in life expectancies. This chart shows the big leap in average lifespans for men and women over the past 50 years, with more and more people living well into their 90s. It's fantastic news, but it does add a twist to retirement planning. Living longer is amazing, but it means your money needs to go the distance too. This is where longevity risk, or the chance of outliving your financial resources, comes into play. In other words, we need your nest egg to work as hard as you did to build it. With inflation sticking around, relying solely on bonds or income-generating assets might not cut it. Growth is still key, even during retirement, to keep your quality of life high and your worries low. Having the right portfolio balance with income and growth is more crucial than ever, and having a trusted advisor like myself in your corner can certainly help. Now, I hope these insights have given you a fresh look at retirement planning. If you got questions or want to chat about your own plans, I'm always here for you. And please try to check out new podcasts released next week on F Your Finances. Have a great day.